Hello, good afternoon, everyone. We are waiting for the participants to log in.
Okay, for video and voice.
Who asked you to do it?
Africa.
Africa. Yes.
Can we start? Yeah.
Yeah, the floor is all yours, Farizal.
Hello. Good afternoon, ladies and gentlemen, and welcome to today's webinar session. My name is Farizal, and I'm a partner at RDS, focusing on the energy projects and infrastructure practice. And I'll be your moderator for today. The topic for today's webinar is Budget 2020. Is the budget a prelude to a more aggressive tax audits? Together with me now is our very own senior partner, Datuk Naban, and Mr. Saravana Kumar, our partner, Head of Tax, SST and Customs Practice at RDS. Both Datuk Naban and Saravana are ranked as the Malaysia's top 100 lawyers by Asia Business Law Journal and as leading and highly regarded individuals for tax matters by Legal 500 and Chambers Asia. A pleasure to have both of you on this webinar. Now, briefly about the budget 2020, with 233.5 billion ringgit allocated for operating expenditure, 75.6 billion ringgit for development, and 23 billion ringgit for National COVID-19 Fund to boost recovery from the impact of COVID-19. Budget includes various assistance to SMEs, allocations to support more low-carbon, sustainable, environmental-friendly initiatives, and many others. That's 332.1 billion ringgit. It is the biggest budget ever for Malaysia. How will Malaysia fund such budget? In addition to new things announced like prosperity tax, service tax on e-commerce platforms, and tax on foreign source incomes, what other measures can be anticipated from the government so that it can fund such budget? For today's sessions, Datuk Naban and Sarah will be sharing their views on the possible effect of result from the 2022 budget announcement based on their recent court experience, focusing on the legal impact of voluntary disclosures made by taxpayers. For those who have any questions for the panelists, please feel free to drop your questions by clicking at the Q&A button at the bottom of your screen. And the panelists will do their best to answer the questions towards the end of the webinar. Without further delay, Sarah, the floor is all yours.
Thank you, Farizal. Ladies and gentlemen, we thought we will do our budget seminar in a way that's different. Our topic is whether the budget announcements plus the Finance Act, the Finance Bill now, still a bill, Finance Bill 2021, these two prelude to a more aggressive tax and customs collections next year. We don't know what's happening with indirect taxes yet because the bill doesn't cover indirect taxes. Probably another bill will be issued later. But we thought we will share our thoughts from what we have seen in courts in the last few months in this year. So I thought I will start by giving you some newspaper show write-ups so that you can know what's happening in the market. Let me just give me a moment to share screen. We will start first. Okay, so Cukai Makmur was announced as an attempt to collect more revenue. The government anticipates to collect 3 billion ringgit, but the Monday after the announcement of the budget, the response has been not so great. 33.8 billion ringgit have been wiped off from market capitalization in an immediate reaction to Cukai Makmur proposal. So it's quite a big thing because Cukai Makmur may government may think is the best option, but the market doesn't look at it from that angle. Of course, the most famous ongoing case among individuals would be the Najib's case, where revenue has been relentless in going after him, rightly or wrongly, because merits haven't been heard yet. but they've been asked to pay a large sum of money, 1.7 billion ringgit. And the Court of Appeal has recently granted an interim stay pending the appeal they have filed to the federal court to see whether section 103, 106 is a provision that takes up the fundamental rights of right to be heard. I personally take the view that pay first, talk later is a concept that we should not advocate in today's environment. There are many instances of abuses of power by authorities all over the world. Tax department is no exception to that. In cases where there's a genuine taxpayer disputing on a technical point, I'm of the view that we should allow the merits to be heard before the tax court. Until court makes a ruling, the money shouldn't be collected first. I think this is the practice in Australia, especially in novel points of law. The ATO doesn't collect the taxes until the court makes a final decision on the matter. Malaysia used to be like that in the past. There used to be a concept called standover. Whilst you are in court, the revenue will give you time not to pay until the special commissioners make a ruling on that matter. It is for the last 10 plus years that practice has been removed. So there is an eagerness in asking taxpayers to collect first. And naturally, taxpayers who are genuine taxpayers, who are conducting genuine business and been paying the taxes properly, are aggrieved because the amount being asked are very, very substantial. Just to give you an idea of taxes, this is last year's case, still ongoing. You can see Petronas and TNB's taxes are about 5.4 billion ringgit. And of course, multinationals are also being challenged in court. Example is the customs case. So all these cases show the revenues pursued for taxes. This is from the Bloomberg this year, where they served Datuk Najib with bankruptcy notice over tax bill. This is no exception. Many taxpayers are having this problem now. So are we in the right direction? Even before the budget, even before the bill was introduced, this is the background that we have. The good thing here is courts are granting stay orders, notwithstanding what the IRB tries to tell you at their seminars, that courts didn't grant leave for judicial review. Although courts may not have granted leave for judicial review, courts are granting interim stay orders. And there are ample of newspaper reports to support that move. And taxpayers who diligently manage the tax affairs in a smart way and make sure the filings are in good order shouldn't face much problem in trying to secure a stay order. Just that you got to strategize your litigation approach at the earliest opportunity when the revenue knocks on your door for audit investigation. Please don't wait until the assessments are out and then try to go and secure a stay order. That becomes a bit more difficult. Yeah. So with this background, what does the crystal ball say for next year in 2022? So let's go and look at the finance bill. I'm only going to look at what, in my view, which I think are the key amendments to the Income Tax Act, RPGT Act, and the Stamp Act. There are not many massive changes per se, but you can see items are being introduced for enforcement purposes. First, there is a new section 66A, which the revenue wants to introduce, where the revenue wants to require taxpayers to carry a tax identification number. This is something that is very common in India, because in India, they don't carry IC. So they are required to have a tax identification number as an attempt to keep track of businesses. But we know India doesn't have a magic record when it comes to collecting taxes. Leakages still happen. So I don't think personally an effort like tax identification number will help, because Section 66 is about persons chargeable to tax. 66A is a section that is being inserted to the Act. It says that now following person shall have a tax ID. Any person who's accessible and chargeable to tax. I thought those who are already paying tax have their SD and OG and the C number or a P number for our businesses. So it's going to be over and above what we have. Anybody who is required to furnish a return will also have a tax number, nothing new. And or any person who's a citizen aged 18 years and above. I don't know whether you all have checked how many Malaysians are above the age of 18. We checked online. In 2019, there were nearly 22 million Malaysians above the age of 18. So imagine you need to create these ID numbers for 22 million Malaysians. When all Malaysians carry an IC, a newborn baby is given a MyCard in Malaysia today. So do we need another identification number when the whole country is already under the national IC registration concept? But this is what revenue wants to introduce, and the government has introduced to the bill. Well, in a period where we're going through pandemic and austerity measures, I guess they don't see these as a cost because it'll be quite a bit of money to manage this data. And bear in mind, only less than 1.5 million Malaysians pay tax. So will an ID number increase number of people who are going to have pay more taxes? I don't think so, because everyone who was paying tax is already having a tax number. People in A and B already have a tax ID number with us. So we are going to apply, I guess, eventually and get a number and keep this number. And revenue has to then probably what they call synchronize their system to make sure that which number they're going to use for identification purposes. According to the budget speech, Finance Minister said if you don't have this ID number, you can't apply or you can't tender for government contracts. But that is the purpose. There is no need to impose this requirement on all Malaysians above the age of 18. And you're looking at 22 million people being registered in a database to get their ID number. So that is the first immediate comment I have, because I don't see an immediate need for tax identification number. But is it the government has intention, or revenue has intention to intensify more audits or keep track of more people, or is the existing numbering system or registration system is not so great? And correspondingly, this applies to RPGT Act, Section 57B of the RPGT Act. If I may show you that. So they're also introducing a new section there. Every person shall use the ID number assigned to you by the DG. Now, that's the other headache starts, because remember Section 66A says only if you're a chargeable person in Malaysia, if you file tax return, or you're a citizen above the age of 18, you got to get this number. But if you're a foreigner disposing of a property in Malaysia, you won't fall under the three scenarios under Section 66A of the Income Tax Act. So how then, for RPGT purposes, 57B, every person shall use the ID number, because a non-citizen may not be able to get this number. So it's interesting to see how it is going to be enforced. Similarly, for what they call the purposes of Stamp Act, a similar provision is being introduced as well, where they say for the purpose of this act, every person shall again use the number that is given to you under Section 66A. So again, that begs the question, a non-resident who comes to Malaysia to execute a transaction, he won't have this tax ID number. So how would he manage this? Because Section 66A has only limited tax ID number to 3 categories of people. So that'll be interesting to see how non-residents who don't file tax returns or who don't pay income tax in Malaysia are going to get an ID number, which they're going to use for RPGT and income and stamp duty purposes. I thought this is only going to increase compliance costs, not only for the government to revenue, but also to taxpayers. Because employees now who are in the PCP system, the monthly tax deduction system for employees, you may have to then adjust your system accordingly or synchronize your system accordingly to enter these new ID numbers into the systems that you have. So imagine if you got 20,000 employees in your group, you got to make sure you get all this right. So I thought the ID number may not be an effective way to get compliance because existing systems are already catering for that. But I don't think this is going to expand the tax base. What the government wants to achieve.
Before you move to the next section, there are many students who are still in college. Would they be required to get identification numbers?
Under 66A, yes, Naban.
Yes.
Because the language is so clear. Let me
Hmm.
just go back to 66A. Yeah, any person who's a citizen at age 18 and above. That's why I say there are 22 million Malaysians in this category. So college students, those in polytechnic, all of them will have to apply and get this number, And the question is, what happens if we don't get this number? They don't put a penal provision here, but under the Income Tax Act, there's a general provision for offences. And that is where they can go after those people.
Well, you see, I'm just worried that there will be selective prosecution.
Yes.
Of young children, and that would be very miserable.
Yes. But when the budget was announced, the finance minister said the purpose is to ensure that that when you apply for government contracts, you need this number, but young 18-year-old boy in school may not apply.
And the other thing, as you rightly pointed out, unlike India, we all carry an identification number.
Yeah.
I cannot really understand the logic behind that, but I guess
that's how they want to implement the law. So that's one part. And the other thing, as I mentioned to you, they also apply this to RPGT and Stamp Act. And what happens for non-residents who come and transact? Because they won't fall in this category, yet they are supposed to have an ID number for the purposes of the Act.
Yes.
So we have to wait and see how it's going to manage. And next provision I wanted to share is Section 106A of the Income Tax Act. So this is a new section. Power to call for bank account information for the purpose of making a garnishee order application. So where civil proceedings has been instituted and a judgment has been obtained, the DG may by notice require any financial institution for the purpose of making an application for a garnishee order. But as we all know, we got 2 tiers of appeal in this country. So even if a judgment has been obtained, there can be an appeal to the higher court. Would the DG still want to go and apply those information or not? And that's the first part, yeah, asking the banks to give this information. But the other troubling part is Section 2. The financial institution who is required to furnish this information shall not disclose to any person that such request has been made. So if that is my bank account and revenue is asking for my bank account details, the bank is prohibited from disclosing it to me. That's not right, I think, because in the era of transparency, dealing with my money in my bank account, the bank should be given the right to inform me. I don't know how it's going to sit with Bafia.
No, Saravana. And if you see the procedure code in our country, you apply for garnishee on an ex parte basis. Yeah. That means I, the customer, do not know. Yeah. You then serve it on the bank, the garnishee. The bank then will notify me, but I cannot move the money because the moment the order is served. I cannot understand the logic behind this as well.
So these are all the new provisions that they've introduced, and it's going to be onerous to the banks, to the financial institutions, to have this kind of provisions, especially when, as Dr. Naban mentioned, the whole court process on an ex parte basis. So why make it more onerous? And the next provision is 107D. This is a sort of withholding tax provision. Whenever you make tax payments made to an agent, right? Any monetary form to an agent, dealer, or distributor arising from sales, transactions, or schemes carried out by the agent, dealer, or distributor, the payer should credit 2% of the payment payable, and within 30 days, credit the payment. Again, bear in mind, ladies and gentlemen, this agent, dealer, or distributor, no distinction is made whether he is a tax resident in Malaysia or not. So that means as long payments are made to a local or non-local agent, distributor or dealer, then you are required to make this withholding tax payment. The headache here is how do you manage the definition of agent, dealer or distributor. So they come up with the definition now to say that, well, agent, dealer or distributor means any individual resident who is authorized by a company to act as its agent, dealer or distributor and who receives payment in monetary form or otherwise from the company arising from sales, transactions or schemes. Again, I see an immediate contradiction here. If you look at this provision, it says receives payment whether in monetary form or otherwise. But in subsection 1, the 2% is supposed to credit, to withhold and credit is arising from the payments made, monetary form payments. So how does it here? Monetary form is what it's supposed to withhold from, but in the definition, they have included to say monetary form or otherwise, 2%. So how, if I pay somebody all in kind, say I pay him in 10 kilos of mangoes, there is no requirement to do withholding tax because it may not fall under definition. But Farizal, are you not able to see the finance bill? I've been sharing the bill. I just got this message. You are muted, Farizal. Okay, you sent me this message to say you can't see.
Yeah. It's still you're still on the Bloomberg.
Now?
Not yet.
Okay, wait. Now let me share. Oh dear, so I've not been sharing the bill with you all. I thought I've been sharing the bill. Thank you for alerting me. Ladies and gentlemen, I'm sure you are familiar with the bill by now. My tax friends are more familiar with the bill. This is the tax identification number. And if you look at it, how widely it's been crafted, I will summarize this later. But I want to cover section 107. Right. Yeah. So deduction from payments made to an agent. This is what I'm talking about now, friends. You can see if you make payment in monetary form to an agent, dealer or distributor arising from sales, transaction or schemes, you are supposed to credit 2% of the payments made. Payments in monetary form. But in the definition provision, they have said agent, dealer or distribution means any individual resident who is authorized by a company to act as an agent, dealer, or distributor, and who receives payment, whether in monetary form or otherwise. So why do they have to include this if the withholding tax is only on a monetary form? That's first question. Second question, why you make all businesses as agents of the government? We are not tax collectors. I can understand withholding tax concept when you want to collect tax from non-residents because it's impossible for the IRB to go and collect from them. But these are all resident individuals. I cannot understand the logic. Shouldn't that be revenue's job to go and collect taxes from these agents, dealers, and distributors? Because it's imposed as a duty on me, who's making the payment, to withhold 2% and submit. And what is a dealer, agent, distributor is not being defined because we may think he's not our agent, he's not our dealer or distributor. The revenue may think otherwise. And we know how revenue has very interesting way of defining the law. So I thought section 107D, the new section, is going to be onerous to a lot of businesses in this country because there's already an existing section when you pay commission. But now is any form of payment that you make, you need to withdraw 2%, withhold 2% and submit. So it's going to create a bit of administrative burden. And what happens if you miss the payment? Or worst case, friends, if the revenue comes and claims that particular supplier is your agent, or a particular supplier is your dealer or distributor. Because it's a very wide concept they will take. And just because we didn't withhold the 2%, they will come and penalize you and ask you to remit or pay penalty on that. And we know how the law has been abused when it comes to the penalty provisions. So this is one provision I thought not necessary to be introduced and make businesses suffer more administrative compliance requirement in order to collect more taxes for the revenue.
Saravana,
Yes.
in your reading of this section, do you think if I am a retailer and I buy from a wholesaler, say the basic provisions, rice and sugar and all that from my grocery shop, I have to now deduct 2%?
Well, common sense will say it shouldn't be Naban, but if you look at the way they defined it, sales, transactions, or schemes carried out by that agent, dealer, or distributor. Your supplier could be a dealer as well.
Yes.
See? So it's very wide. So you know, our supplier of our pantry goods in our office,
Yes.
it will be a transaction that we carry on. And he could be a dealer because it's not being defined by them, you see. They just say, what is an agent, authorized company who receives payment in monetary form or otherwise from the company arising from sales, transaction, or schemes.
Yeah.
So it's
So
very
widely-
wide definition is given.
So widely defined.
But the thing is, these are all like individual residents, you see. So why withholding tax provision is being used to collect money from individual residents through Malaysian taxpayers? Revenue should go after those agents, dealers, or distributors themselves. So that is one part of the new act.
Essentially, it's aggravating the inflation position.
Because some may just hike up the price
Yeah.
if you don't pay taxes. So that's one. The rest are all fairly normal. Of course, they've expanded the RA provisions and all that. But what I wanted to highlight is section at the new para 28, where now para 28 has been amended, whereby foreign source income is no longer taxable, tax-free in Malaysia, except for a non-resident who receives it in Malaysia. He will enjoy tax exemption. And we're already seeing the consequences of this proposed amendment. Businesses are rushing to get their income, businesses restructured because many of them have foreign source income received in Malaysia and they all are diverting it to other jurisdictions. Malaysia claims we are doing this because of the OECD requirement, but Hong Kong has not amended its foreign source income law still. So I don't think, I think we're overreacting to that, but businesses will know how to manage their affairs. The question I wanted to ask here, it is being asked by everyone, dividend income. So if I receive dividend income from abroad, do I enjoy tax exemption in Malaysia now? Because if I've invested in shares in Singapore, I receive dividend. And remember, dividend is a taxable income in this country. It is exempted by virtue of paragraph 12B, right? 12 capital B exempts single tier dividend income. In the past, foreign source income will all fall flatly under paragraph 28. Now, some petitioners take the view, paragraph 12B, capital B, the foreign dividends can fall into that. At the first glance, if you read paragraph 12B, I agree with you. Paragraph 12B of Schedule 6 seems to cover single tier dividend even if it is from abroad. But that is if you take a literal reading of paragraph 12B. But if you take a purposive approach of reading paragraph 12B, why was paragraph 12B introduced? It was introduced in 2008 when the single tier dividends were introduced in Malaysia. So the purpose of Parliament, it can be argued, was to give single tier exemption, single tier dividend exemption for such dividends from Malaysia. So there are two ways of reading this particular provision. Paragraph 12B. Whether single tier dividends from abroad, would it enjoy exemption in Malaysia? given that paragraph 28 is being amended. Two schools of thought. Plain reading, many take the view it enjoys, but I'm just throwing the spanner in the works that if you have what we call, if you take a purposive approach, courts may not agree with that particular view. I can cite the case of positive vision. The majority view of the federal court was that a Labuan company that can enjoy the exemption under the Labuan order in that case, court said it must be a Labuan company which is taxable under Lobata and not a Labuan company which has elected to be taxed under the Income Tax Act. The court took a purposive approach to interpret that particular provision. So it's yet to be seen how the revenue is going to look at it. I don't know whether they have given any thought to that. If they haven't, I don't intend to instigate them, but I'm just sharing it with you to highlight that how will single foreign source, single dividend will be treated in Malaysia. We've got to wait and see. That's first part. Second part, what happens if I am supposed to get foreign source income, but I don't want to receive it in Malaysia now? I just park it abroad. Because section 3, the charging section says, income tax only chargeable on income received in Malaysia from outside Malaysia. The word is in past tense, received. So if I don't receive it in Malaysia, it is still kept abroad. Say my dividends or my income from Singapore is kept in my Singapore account. I don't receive it in Malaysia. Would that be received? Some revenue officers suggest that they may want to take a constructive view, a constructive receipt view. But the law doesn't provide for constructive receipt view. If you choose not to receive it in Malaysia, I think section 3 doesn't kick in yet, because the language is very clear, received, not received or receivable in Malaysia. If it is receivable in Malaysia, then maybe revenue may be able to tax it even if not received. But here the past tense is being used. Audience may remember the case of Clearwater, where Dato and I argued for the services industry, where we said that monies for services to be rendered means you only tax the income of the golf course upon service being rendered. The law has been amended today to say services rendered or to be rendered. So these are some points you got to note when it comes to managing your foreign source income. Okay. The other provision I wanted to highlight, a new amendment to the Stamp Act, putting it in line with the tax legislation, is a new provision, section 36D, that says that there will be finality of assessment, whereby if once the stamp office issues an assessment, it shall be treated final and conclusive if you do not appeal within time. Yeah, if you don't lodge any appeal, you will not be able to appeal later, and the assessment shall be deemed to be final and conclusive. So these are the provision I wanted to highlight to you, that the new provisions that have been introduced under the Stamp Act to make again the finality of appeal in favor of the revenue. So other than these major changes, mostly, as you can see, is all compliance based, you know. That's why I'm of the view that this budget and this bill is a prelude to a more aggressive tax collection system. For those who are in practice will already recognize that the revenue has become very aggressive. There are already stamp duty audits on banks and insurance companies. Section 44(6) exemption on charities, charitable hospitals are already been revoked by revenue. So these signs are showing us that we are moving in a more aggressive position. Or the revenue is letter to many businesses, asking them to disclose all their clients' name, lock, stock, barrel, for the simple purpose of revenue wanting to widen the tax base or tax data. So all these things are suggesting that revenue is only going to be more aggressive in the coming year. We have not seen the customs bill, but I wouldn't be surprised more enforcement provisions are being introduced by the customs. So these are the few sections I wanted to highlight. So just to recap before we move to our Q&A, So this is the tax identification number. Our first concern when it comes to tax legislation, 66A, where all these three categories of people got to have a tax identification number. Dr. Naban pointed out rightly that look at item C, even a college student will be required to go and get a number. And what happens if you don't get a number then? Are they committing an offense? Would the general provisions of the Act for non-compliance can be thrown at them? Can it give rise to selective prosecution of these young people? That's number one. Number two, even for stamp duty and RPGT purposes, you are now required to use this number. But if you're a non-resident who doesn't fall under A or B, if you're a one-off, someone who owns property in Malaysia, you don't file tax return here, right? You don't furnish tax return in this country, but then you enter into an agreement to buy a property in Malaysia or to sell a property in Malaysia. What then happens? Because now they say in Stamp Act, for the purposes of this Act, every person shall use the tax ID number assigned by the DG under 66A. But if I'm a first-time buyer of property in Malaysia, how do I even get into this? I'm not going to be staying in Malaysia. Or if I dispose of an old property of mine and I'm supposed to pay RPGT and I'm a non-resident. Also, similarly, they said every person shall use a tax ID number. And more importantly, do we need a tax ID number when all citizens, all Malaysians now have an IC number with you from the time you're born, you know? And items A and B, people are already paying taxes and filing returns have a tax ID number. Then section 106A, which is to ask the banks to provide this information, and not only to provide, but not to disclose it to anyone, which I thought is not right. The banks will at least be able to inform their customers, because under the, as Dr. Naban pointed out, under the civil procedure process, if the orders are served on the bank will notify the the bank account owner. So how will it then manage, you know? So the other provision is 107D, which is far-reaching, agent, dealer, or distributor. As Dr. Naban pointed out, if a supplier comes and supply coffee and tea to you every month, how would that make, you know, make this as an issue? Do I need to then withhold 2% and pay? Because the word dealer is very wide, you know, and I don't think we should be doing it like this, yeah. But that's how we want to introduce. Because I got this fear because of section 109B, the withholding tax for special classes of income. When it was introduced, it was supposed to be only for technical services, but later it became technical and non-technical services as how the IRB interpreted. So I guess we really got to manage why we introduce all these provisions, because these are all payments to resident businesses, you know. It's just going to make more onerous. Okay. Then the final provision was paragraph 28, as I highlighted to you all earlier, whereby foreign source income is now very limited. Only those who are not a resident can enjoy this exemption. So at least not too bad for the MM2H person. But again, I don't see how, because MM2H person also will be a tax resident, because residency in Malaysia is not based on citizenship for tax purposes. It's number of days you spend. So I don't know who is going to benefit from this. Someone who stays less than 182 days in this country every year. Because remember, under section 7, if you stay in the preceding years for 90 days, you can still be deemed to be a Malaysian tax resident, you know. So remember, the last 4 years, if you stay for 90 days in each year, you can still be a tax resident. So we really don't know who's going to enjoy this exemption. So it arises to the question of foreign source dividend income. Do you enjoy tax exemption or not? Because in the past, para 28 covered that. Now, how? School of thought, one school of thought takes the view, paragraph 12B will cover, because paragraph 12B says any dividend you receive, which is where no tax is deducted as source, may enjoy. It doesn't make a distinction whether it's a Malaysian source dividend or foreign source dividend. But that is if you take a literal reading of the provision. But if you take a purposive approach, remember this paragraph 12B single tier tax exemption was introduced when single tier was introduced in Malaysia. So if courts take a purposive approach, I'm just worried that they will read paragraph 12B to be confined to dividends derived from Malaysia only and not foreign dividends. Remember, Naban, the positive vision case.
No, Saranan, it is that's the point I wanted to make. It is the right of the government to tax us, but it has to be precise, clear, with leaving no ambiguity. Unfortunately, this legislation creates all of these uncertainties, and the objective doesn't seem so transparent. And if you, as you remember, Saranan, as you recall, and you're better in all of these, the purposive approach is only relevant because the basic principle of tax law is no intention, no equity. What is there, so that everybody knows what the law is. But now our federal court has said they can from time to time introduce a concept of purposive approach, and you could create so much of ambiguity.
Yes.
Yeah.
So that is where the challenge is. That is why I think we must be prepared for a more what we call aggressive audit from next year.
It just means Saravana will be kept busier, I guess.
So let's go to the questions. There's a question from Archie Yap. Would the tax ID number pursuant to 66A become obligatory for fresh graduate to apply for a number even though I'm still looking for an employment? My view is yes, because law is quite clear.
I could share, there are companies that are inactive. They have ordinarily in the old days, you don't even have to do a tax filing because there is no income, it's dormant. But if you don't do it, they are aggressive. They can compound you and ask you to pay a penalty. And can you imagine if they behave in that way with all our students? Because there is, as Sarnan pointed out, there is a general provision in the Income Tax Act which says that if you are breaching any of these sections, you will end up being liable for a criminal offense. Is unfortunate.
The other question, 107D is for resident. Yes, it's for residents, individual resident. So, of course, if you read the definition, it should include companies, but don't be surprised how revenue will read. We have a lot of withholding tax cases where revenue doesn't look at the subsection 5, just look at subsection 1, and they say, no, you won't apply. But there are also many individual suppliers. In our office, our supplies are made by individual, and they are not registered companies. Not everyone registered a company for the supplies. So for the attendee who asked this question, it all depends how the revenue wants to read it, But if you ask me, yes, because the definition says individuals. Tony asked, when does section 107D take effect? Tony, under the bill, it is on the 1st of January 2022. Take Chai has asked this question. A company where revenue after LHD and audit says all employment contracts need to be stamped. Our letter of offers of employment fall under the definition of employment contracts. It is not something that I have with me. My act is not here, but I'll come back to you. But even if it's to be stamped, it's only going to be stamped at worst. I can't think it should be stamped because there were exceptions for item 4. There is no special category to stamp your what you call your employment agreement. But even if it's to be stamped, where there is no special provision, it will fall under item 4. My recollection is under item 4, there was an exemption. Let me just see. I found an old copy of the act here. Whether there is an exemption. You see, there is an old, under the Exemption Act, it says For service of personal employment, when the wages do not exceed 300 ringgit, you enjoy an exemption. But today, nobody's salary is your minimum salary has to be 1,200 ringgit. So even if it's to be stamped, I check, I think should only be 10 ringgit.
Lik Chai, insofar as letters of offer is concerned, if it is not accepted, then it's irrelevant. But if a letter of offer is accepted, that becomes a contract in law. And ordinarily, we don't, a lot of companies don't have a very special contract of employment. The letter of offer is accepted, and that forms in law a contract of employment. And thus, they can be difficult. And as Saravana pointed out, it all seems to augur that the revenue is going to be very aggressive.
Then a question from another attendee. Revenue issued media announcement yesterday, 16 November, offering a 3% remittance for under the special program for income remittance, 3% tax. What's our view? Well, if you're not paid your taxes, you want to pay your tax, you can pay. But if it's foreign source income, why do you want to remit the money? You should remit and the money, you should not pay any tax. But unless you're given a composite assessment, legally speaking, revenue can always reopen and audit you. Yeah, that's if you're going to do any form of voluntary disclosure, please get a composite assessment done. Otherwise, please don't fall, because there are cases where they have reopened those taxpayers. And if you look at, if you go and speak in the market, taxpayers who took part in SVDP are today being targeted for audits. That's a fact as well, right? So I guess you just expand the revenues data on who they should go and knock on their doors. A very interesting question from Lindy. I believe it's Lindy. Will my children who are Malaysians but working overseas also have to obtain a tax ID number? I think so too, because if you look at the subsection C, it says any Malaysian citizens above the age of 18. Whether you work or you don't work in Malaysia. So if you're a Malaysian above 18, you got to go and get yourself registered, I guess, based on reading of it. Okay. There's another question from Archie. Subsequent to my question, would it be burdensome for me to go and apply fresh grad for me to start paying income tax upon obtaining the ID, even though I'm not working? Archie, I don't think you should pay tax first. You get a number doesn't mean you got to pay tax, because yes, you must be employed gainfully first, and your income must fall in the threshold for taxes to be imposed on you. So I think you don't have to be troubled by that. Vanessa has asked this question. What would the approach be for investment in shares and stocks via online platform, and dividends are credited to your stock account and accumulated there? It is not exactly received in Malaysia. But Vanessa, when you, it depends, where is the stock account server and all that is based, and how you're going to access it. If it doesn't come into Malaysia, received in Malaysia, of course, this Act is 67 Act. Received in Malaysia would ordinarily mean receiving the money physically in Malaysia. But it is yet to be seen how online transactions are going to be taxed, because this is something that all tax authorities in the world are grappling with, how to tax online transactions. Yong has asked this question. I have money kept foreign bank account many years ago, which I transferred from Malaysia to foreign bank, but I do not keep the proof of remittance. If I want to remit it back to Malaysia from 2012 onwards, such fund received in Malaysia need to be taxed. Any recourse? Well, Yong, but the burden will be on you to show it's not your income, because if it is your Malaysian money that you went overseas, you're bringing it back, it should be capital in nature ordinarily. So the burden will be on you to prove that it is actually not income, but merely bringing back your capital. Proof of remittance may not be there. If it's more than 7 years, I guess you don't have it. But you can always ask your foreign bank account to give you a confirmation that how the money was received into the account. So at least you got secondary evidence to show that it is actually remittance from Malaysia into the account. Because the burden will be on you to show it's not income, you see. Fang Liang has asked this question. If company receive dividend income from foreign entity, what stand should we take? That's why Fang Liang, depending on the two schools of thought I've highlighted to you, ordinary reading suggests that, and as Dr. Naban pointed out, law must be very clear, no ambiguity. And here the law is clear. It seems to cover all types of dividend. Purposive approach should only be used in very, what's the word used? In exceptional circumstances where literal reading is ambiguous.
Yes.
Yeah. And that is the view taken by the minority judges in the positive vision case at the federal court. But the majority judges took the view otherwise, and they said they want to apply purposive approach.
And,
so,
if someone receives dividends, Saravana, from overseas company, I think we should rely on 12B, and maybe even before tax, the money is brought. Maybe we, if it's a substantial sum, we should go and seek a declaration
from court, get a relief.
Yeah, I think so.
Maybe one way of doing it.
Yeah, I think we should get certainty, and we should deal with it if it's substantial. And it's only unfortunate if it is big, but not big enough to pay Saravana's fees.
There's one question here. If I remit 1 million from Singapore to Malaysia, but 1 million accumulated income, gross income, employment income, capital gain from share disposal, interest income, principal fund, and in the FDs withdrawn, how can this 1 million be taxed at 3% if from 1 Jan 2022 to 30 Jan 2022? How can we justify and separate the capital portion from the tax portion? Well, you got to, number one, you got to identify. Unfortunately, the onus is going to be on you to identify your money. It won't be revenue. You got to do it. Yeah. So if you can identify it, number one. Number two, remember, once you've identified, if you are remitting this money from Singapore, you would have paid tax in Singapore for the employment income and for the interest income. So shouldn't you be able to claim the tax credit? Because the DTA says whatever taxes you pay in Singapore, you should be able to claim a credit in Malaysia. Just that we have looked at the DTA, your years of assessment may be differ, but if that particular income taxes have been paid, naturally you should be given a credit in Malaysia. So the credit in Malaysia would be, of course, more than what would be the amount equivalent to the taxes you paid in Singapore. So on that basis, then there will be no room for revenue to tax you at 3%. But remember, this is a voluntary disclosure thing. They're not going to come and segregate for you, you know. Their aim is you bring in 1 million and you just pay the 3%, lah, you know, and we move on. Yeah. Next. Sole, one question here. Is a sole proprietor individual? Answer is yes.
Yeah.
I would regard as an individual. Kent asked, if I'm a Malaysian working in Singapore for the last 10 years, paying taxes in Singapore. I've resigned. I'm returning home to Kuala Lumpur in 2022. As I'm returning for good, I'll be remitting all the savings from Singapore to Malaysian account. May I know whether the money will be subject to Malaysian tax? Answer should be no, Ken, because remember, it is not foreign remittance that is taxable. It is income that you have earned abroad that you're bringing into Malaysia is going to get taxed, you see. Because Malaysian tax law is a tax you on income. Yeah, income. Let me look at section 3 and read it to you again, just so that we appreciate section 3. Because capital sum is not taxable in Malaysia. And whatever taxes you have paid in Malaysia, in Singapore, you should be entitled to a credit. See, the law is subject to this, in accordance with this act, a tax to be known as income tax. Income tax shall be charged for each year of assessment upon the income of any person accruing in or derived from Malaysia or received in Malaysia from outside Malaysia. It must be income. And this is an income you've earned in Singapore, which have already been taxed in Singapore. So whatever you bring back to Malaysia, you should be able to enjoy a credit.
Okay. I would advise Ken to bring back the money by end of this year.
Yeah, that's the best thing to do, Ken.
Yeah, Ken.
No?
I think that might be the better way.
The next question is, anonymous attendee asks, if I buy a Rolex in Singapore for my employment income, can IRB deem to tax the market value of Rolex on me when I come back to Singapore, from Singapore to Malaysia. Well, I so far have not seen them being that aggressive, but if they go through your credit card statements, when you do an audit on you, if they see a purchase of a Rolex, they may want to know where you got the money from. But I don't think they're going to tax you based on what you wear. There is no income tax officer stationed at the airports and at Causeway at the moment. But I wouldn't be surprised if the next amendment will put for an officer to be stationed there, to observe people who come and leave the country. Okay, we got 5 more minutes left first. Let me take another question. Take Chai asked this question. There are companies with thousands of employees. The person who asked about stamp duty. Some employees abscond after 1 day of work. If this contract need to be stamped, it will create chaos in the HR department. Well, they think compliance is part of the thing they love to do, Take Chai, very unfortunate, Will the tax identification number be used in all bank transactions? Tony asked. I don't know, Tony, but we have to wait and see how, because how about retired people who don't pay taxes? Are they going to be compelled to go and get an ID number as well? Remember, there are 22 million Malaysians, who are above the age of 18. So I don't know whether the banks want to impose it or not, because so far, the banking laws don't seem to require that at the moment, at least. Okay. Sir has asked this question. If a company has pioneer, non-pioneer income, the pioneer status income is a granted tax exemption. The calculation for prosperity tax of 100 million should be on the pioneer income only. If the chargeable income for non-pioneer business is 20 million, then the statutory income for the pioneer business is 100 million, then prosperity tax is not applicable. That makes good sense. If you ask me, if you got two types of income, right? One is tax exempt, one is not tax exempt. Even if the tax exempt income is 100 million, the prosperity tax shouldn't apply on you. That's what you're trying to say. If I only make 20 million on the taxable income, I'm still below the threshold. But we got to see, let me look at the bill, how they have drafted the 33%. Because I thought, see, it says okay, you may have a point, because it says on chargeable income. Chargeable income for every 100 million first 24%, for every ringgit above is 33%. But you see, I think the headache is because the law only recognizes one chargeable income. So would you be in a situation where, depending how your tax com is prepared, sir, do you have it, do you exclude the pioneer status income from a tax com? Because I know in the past, foreign source income will be exempted from a tax com. So if it's exempted, if it's removed, then it'll be easier to show that your income is only 20 million. But if you compile them together, then you may end up showing the 120. But may not show, isn't it? Because the exemption for pioneer status is on statutory income. So even before you arrive at chargeable income, you may not even have the 100. But let's see whether revenue shares this view or not. So they may take a different view, Interesting question. We are awaiting for a sum of inheritance to be remitted from overseas into Malaysia. While this is not income, do we still need to declare this? I don't think so. You only declare income. But if you declare, you'll treat it as income, yeah? So I don't think you're going to declare this inheritance, yeah? IRB is to collect bank statement from anyone from the 1st Jan 2022. Can we deem this will only be the case if the tax investigation on a particular person? If they can request people power, if they can use this power to request as and when they like, we will then put all our money below the bait. Any comments? Well, maybe we end up doing that soon because they are just doing fishing expedition. As you now know, they have gone to a lot of, including law firms, asking law firms to disclose all the monies in trust account. Just they want to have a record. And the basis given by revenue in the letters is we want to expand tax base. It's not because of audit or investigation. This is all a fishing expedition. It's not my word. The High Court and the Court of Appeal recently have stated that revenue is undertaking fishing expedition when they went and asked lawyers to produce all the clients' bank accounts in a trust account. So it is something that unfortunately is happening where they are applying the law in this particular fashion. This morning, I spoke to some Australian lawyers from Sydney and Melbourne, and I asked them, does the Australian Tax Authority does it? They said no. They will only ask information if you're under investigation or under audit. They don't do fishing expedition. And this man has been practiced for 30 over years in Melbourne. He said no, he's never come across ATO abusing the provision like that. So I hope we'll have, better provisions of this. How does IRB know when we remit money from overseas into Malaysia? Bank Negara will notify them, I guess, an amount is too big, Yong. If you transfer 5,000 ringgit, nobody cares. But if you bring in a substantial amount of money, I'm sure there's a notification process.
And Saravana, the automatic exchange of information,
Yeah.
and IRB is the receiving authority in Malaysia. So they will also get to know from all other institutions.
Sources. Yeah. You see? Who has asked this question? CPF, which is our EPF equivalent, withdrawn in Singapore, if remitted back to Malaysia, will it be taxed? No, I don't think so. Because that is all your, even in Malaysia, we don't tax you on EPF. And that is not an income per se, because these are all contributors from employers, and your own contribution. And you have paid taxes in Singapore for your salaries that you've earned. So I think it shouldn't be. But we don't know how revenue will react when they see the money. Okay. I think we've covered all the questions that we have. Can the tax credit arising from overseas employment income be used as tax credit against local money to be remitted into Malaysia? But the income is from previous year, and the gross income to be declared in Malaysia is in the current year. I looked at the DTA. The DTA is silent on that. I don't think DTA makes a distinction on the basis period. DTA covers more on the income. It gives you credit on the taxes paid on that income. So if you can show that is the income you're remitting, I don't think the difference in the financial year should matter. And that, at least that's my view at the moment.
And that seems fair because you have paid and you may remit it at a different point of time. Yes.
Yeah. Okay, so these are the only what we call questions that I think I've answered all other questions. Some are repetitive. So no other questions. Let me just do one final check. Okay, no further questions. That's all. We thought we'll only share this, our thought from a legal perspective. These are the provisions that revenue intends to introduce this year. And I think in summing up, I think you're going to see more audits and investigations in the coming year. That's my view. I'm sure the Naban shares the same view. And Farizal, who is an independent observer of a tax matter, and I'm sure he's seeing that from his clients too.
Thank you, Sarah and Dr. Naban. It has certainly been a very informative session for me. Unfortunately, that's all the time we have for you today. We hope the attendees will benefit from the information and views provided by Sarah and Dr. Naban. Thank you for joining us, and we hope to see you soon on our next session. Thank you.
Thank you very much.
Thank you, everyone. Thank you.
Thank you. Thanks.